Okay, so let's get going. Calendar, first step, as always, check on the calendar. We have construction spending, global manufacturing on the Mexican side, global manufacturing on the US side came out about 15 minutes ago. Right? And then we have a couple more bill options during our 2-hour session. Right, so there's really nothing here that will interfere with our day's worth of work. Okay, so looking at the daily candle, if we look at today compared to just yesterday, clearly bearish, clearly a lower low, clearly a lower high. Right, I'm just going to remove that. As we speak, we're pushing off of the lows and trying to go up. And where are we pushing off of? It's this trend line that we came back to retest. Right, so we're retesting the trend line. I'm thinking we're going to close above, and therefore I wanted to be playing the bullish side of this attack to the trend line. Testing the support is where we ended up going to, and that's where I ended up starting to buy. Right, so I have swing trades from the bottom, and along the way I've placed a couple of 3-pip trades like I suggested you would be doing in the chat room. Right, so I know I want to be a seller, but from higher up. Right, so let's go take a look at the hourly chart. Right, so if this is a low that defines our floor, and so now we want to see, what could a ceiling be, right? So if we look left, there's this right there. We might be attempting something around here. We might be attempting something around here. I'm looking at that formation here and this. Right, so I'm just looking to the past to see where this might be heading. If it's not heading anywhere, so be it. Maybe we are coming back under the trend line and going lower, right? We'll find out in due time. In the meantime, this defines our risk, right? And then we have to go to a 5-minute chart and then start building that ladder that we want to operate through. Okay, so here we would highlight support and resistance, just as you see fit, just simple dirty math kind of stuff, right? Nothing, you're not looking for medical precision here. Right? Just stuff like this, and we're building this ladder, and now we're allowing the price to tell us what should be happening next. Right, you keep asking yourself, am I moving to a line or away from a line? And then with that mindset and or supporting your bias, it's either supporting your bias or it's against that bias. Right, so going back to the daily just very quickly, right, we know we're at the lows. If we measure the low, if we measure the entire candle, we did 100 pips, 99 pips, right? It's overextended as opposed to an average. So we're expecting bullishness from here, even though it's a bearish candle, right? So we see that happening here, right? And then because we built our ladder, we're going to play that mindset on this ladder, right? So we want to be buying at support on the way up. Eventually, we will be selling at resistance, right? We will be going back in line with the trend, right? But that's not right here, right now. Okay, so in order for us to make our 3 pips, 3 pips, 3 pips, we have to pick up a box. And then start measuring what's already been happening. Right, so that's already 2 boxes off of the lows. We broke this box. and then came right back in. And we know we want to be buying at support. And so if this is support right here or in this zone, why not buy this? Right. So if I can see cheap or a red candle or any kind of testing of this line here, I'll buy that. Just for the example, I'll buy it right now. And if I get more, I'll buy more. Oh, sorry, I have hiccups all of a sudden. There we go. Right. So now this is my box number one as far as spending 1% of my account for 3 pips, 3 pips, 3 pips. Right. This is swing trades, and that's a different book, right? Imagine these are not there. There you go. All right. So we're going to be trading for 3 pips, 3 pips, 3 pips with a bullish demeanor. Therefore, we have to be buying at support. Right. So ultimately, we expect support to be somewhere, 930. We look to our left, right around here, put a line there. All right. So if we are going lower, this is probably where we're bouncing from. If we are going higher, again, looking left, we have opportunities to become sellers up here. Right. So that's the idea. We want to buy the bottom so that we can sell when it's expensive. Right. So buying the bottom is what we're into. And I'm suspecting that might have been it. Right. So I'm just willing to put a little bit of money on that suspicion. So if we find extra support here, or if we test for further support somewhere, maybe here, I can buy a couple clicks. I'll put one on there. Right. So all I'm attempting to do is spread my risk. Every click of my mouse, with it comes a 36 pip stop and a 3 pip target. All right. So I'm giving myself space in order to keep making that 3 pip reward. Right. First day of 2024. Let's see what we can do with all of this stuff. All right. So now I put 3 clicks in that middle box there. This is just for measure. Yeah, there should be a ton of volatility this year. Just looking at the bigger picture, the divergence between Lagarde and Powell and their policies and their views on inflation, it should bring with it a lot of volatility. And that means, all the markets will benefit from that volatility. Pretty much everybody is paired up against the US, right? So if the US is impacted, all the other currencies more or less get pushed or pulled because of it. Right. So our game plan is to show up on schedule, exploit the system that we have, and leave. Right. If you refuse to leave, if you try to push it, you're going to blow up. Right. So just do your average, potential average, and walk away. All right. So we're starting to profit. We're closing trades that allows us to reopen trades. All right. So we're just recycling the same margin that we have access to. We're not spending anymore. We're just opening, closing it with profit, and then reopening it again. All right. So right there. And there we go. So yeah, the YouTube channel has about 30 videos on there now, and I plan on uploading daily these recordings. And so yeah, go watch everything. Uh, like, comment, share, all that good stuff. Starting 2024 with, an abundance mindset. Give it all away. There we are. Right. So notice I'm not going nuts with the clicks, right? I'm only putting what's allotted in the boxes. Ideally, we have to have plan B, in the back of our mind at all times. And so you have a backup, and then you have plan C, which is the backup for the backup, right? So that's box 3, and so on and so forth. And then if you end up in box 5 or plan E, you're forced to close box 1. Right? It's a commitment we made to 36 pips, which happens to be an average move, right? So we're just trying to survive an average move, right? Against us, that is. So if you have the bias correct, the wind is in your sails. If you have the bias wrong, uh, you're fighting, and the fight should be contained to chunks of 36 pips, right? So within these 36 pip chunks, there's a break even, and you can engineer that break even. All right, so we're closing profitable trades. We're in draw up or up draw, which is the right term. And the account is at $3,400. So we're doing well. Good way to start the year. Once I get this OBS stuff sorted out and I get my poop in a group, I'll be able to do these on YouTube live, and then hopefully get more traction that way. Okay. So we've closed a couple of trades. I can open a couple of trades if I can get that retest, that level here. I'll just put one right there on the red candle, thinking that it might bounce from where we are. Okay, so we built the ladder. On the way to the 5-minute chart, we were looking at the 1 hour, which highlighted our floor and our ceiling. Prior to that, we looked at the daily chart, and we knew we were pushing off of a trend line. And so in this environment, we've limited the risk above and below. We're aware of support and resistance on multiple time frames. And then it's what we do with that information, right? So we're attempting to line up where we are within a couple of ranges on multiple time frames. An hourly range, a 5-minute range. If they tell you the same story, play that story on the 1 minute. And ideally, you'd be doing it at the bottom of the box or at the top of the box. Right? So if I zoom out here and I just reset this box, not this one, but the one above it, right here. This is already one box. And now we're in box two. Now we're in box two, right? From the top, 1, 2, and why not put money here? Right? Just one click. And we are at support. It's not some random click. Right? All of this right there is what I just bought into. And this right here. Right? So I'm spreading my money, spending my money slowly but surely. We're building a position, right? We're not adding to losers. Very, very big difference here. Right? It's spreading risk that we're allowed to spread. And we're allowed to do it within 36 pips of space. And that's what we're exploiting on purpose. Right? So it may go down. It may go down 36 pips. This is 39. And then from here, why not bounce back up like we planned? Right? So this is the stuff that we have to, come up with. This is the kind of plan A and plan B and planning in general that you have to come up. Alternatives. We may use those or some of those alternatives in one day, right? So usually a swing trade, it's one idea, one thesis, and it either plays out or it doesn't. In our case, we come up with multiple theses, and we tend to exploit one or two of them per day, just like we're doing here. Right? It's this probability assessment, and it keeps shifting. And so we shift along with it. And then within that 36 pips of space, there's room to play ping or pong. And so the bias is not the end all be all, right? It's how you manage the trades that don't work. Let's see if we can see it go slightly higher from here. Right, so if we look on the 5-minute, on the left, we're making lower lows and lower highs. And as of late, the last hour or so, we're making higher lows and higher highs. Right, so we've got to keep things really, really simple. There we go, another winning trade. If I see another red candle here, I want to buy that. Right, so anything red in this area, that's support, so highlight support, whatever you perceive to be some kind of support or resistance. Right, this zone right here would be sufficient. We could buy this. Right, we're doing it microscopically. Right, we're not putting our whole trade in one big chunk. There's that red candle I'm looking for, and there's me buying it. And I'm allowed one more click if I see it. Right there. So I just took the money that's allotted in this box. Mm -hmm. There we are. That's what we're looking for. Right? Small, consistent, repetitive behavior. Right? And then ideally we can be finished on time. All right. So working overtime, basically over trading is not what we're after. Okay? The safety is way more important. Hey, buddy. Okay. Perfect. Just like so, right? So without overdoing it, without putting all your eggs in one basket, spread your risk. And then at some point, you get paid for that, you know, uh, postponing of that gratification. It's you don't want to get paid. Well, we try to get paid instantly, but we know logically we're allowing for drawdown, and it's not risky, it's not scary, it's managed. Right. So right there, I just took one extra trade. Right. So I'm spending the money that's allotted. We have to keep that in mind, right? We have a certain amount of clicks per box. Oh, there we go. Right, so one trade within one candle. That's the kind of stuff we want. If we can repeat something similar to that, we'll do it again. There's a red candle, or it was a red candle. If it comes back down, I'll buy it. Come on. Yeah. Like I suggested earlier, we do want to sell, but from higher high. I mean, yeah, from a higher high. We don't want to be selling at the lows. And this is why we built the ladder, and this is why we're progressing through this ladder. Today, it's ever so slowly. What's going on, buddy? Yeah, what's up, little buddy? Yeah. Sorry. My cat is begging for affection right now. Oh, perfect. Just like so. And so now that freed up a trade, freed up some margin, I can recycle that, and I'll do so when it's cheap, right? I want to buy it cheap. Oh, there. Beautiful. All right, so looking at this formation here, what if we were to remove the boxes and then reset on this swing low right there? And then from this swing low, we would expect or anticipate price to remain in the box, right? Just go sideways in the box. That would be a normal market. If it breaks the box, it will likely do so with time remaining in the box, like unused time. And that's where we position the next box, right? So here's our red candle, the cheap price we're looking for. There's that buying opportunity. if we break the bottom of the box, right? You'll notice we just did one standard deviation, right? This is why I'm repositioning the box. Right? I'm expecting the price to stay in this standard deviation, and then it will tell me what happens next. Like the price will tell me if it's trying to go up or if it's trying to go lower. Right? And we know if we go lower, 36 pips from the high, from the most recent high, right, brings us to support that we've already highlighted, 30 minutes ago. If support holds right here, right now, we might be going up to resistance, which we highlighted 30 minutes ago. Right? It's time of day. And where are we right now? Right at the bottom of the hour, right? 60 minutes after the stock exchange is opened, right? So we've already gone through the pullback, right, that we're expecting. There's a click to spend if you have it right there at the bottom of that current candle, if you can, right here. Right. Yet again, I could be totally wrong. It could be way off the mark. And this market, goes to the South Pole today. So, you're doing this at your own risk. I'm just showing you what I would do. Right, so right around here. Right, it's this slowly but surely we're testing levels, and if the level is, working favorably, you make your money almost instantly. If it fails to deliver the money you're looking for, you end up in drawdown. You end up in box number 2. And with that comes management, right? That's where the fight starts. Perfect. That's what we want to see. So if you remember going into the end of the year, all that window dressing that was taking place, it's getting unwound. Right? Remember to the last week of the year, the US was falling, 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 falling. And for the first 2 days of the year, the US has been going up and up and up and up and up. Right, so red candle, I've already got all my money spent, so I cannot spend more, but some of you may be able to. Right. I'm only allowed 4 clicks in this box, and I have the 4 already spent. And so I'm waiting to either break the bottom of the box to spend more, or if we get to go to the top of the box, I get to recycle these 4 clicks. So it's because I built that long position, that swing trade position from the very low right here. Right, these trades down here. And so let's see, let's get ready to spend some money if we must, right? We might be spending percent number 2 in box number 2. right? And then likewise, if we find ourselves pushed, we might be spending percent number 3 in box number 3, right? And then push comes to shove, look where we are, right in line for that expected area, right? So it's this idea that we're prepared to spend the money to go and find that support. We've already aligned ourselves with this. We're just assuming that the higher high and the higher low is what's taking place, right? So our assumption, the probability is higher on one side versus the other. And so we're setting up for that probability, right? And we're willing to take the trades or take the risk all the way down to here in order to find this, right? So right now we're building a position. We're buying, so that eventually we find the support that we're looking for, right? Support that was once tested. And then from here we can bounce, right? So I'm not trying to predict anything. I'm just trying to weigh the two sides, and I'm trying to figure out which side is most likely going to, take the ball and run. And it's this spreading of the money over that time, over that amount of space, right? So these moves are typically 36 pips or less. And this one's 39, so it's because I'm counting that wick. See, there's 36 or less if we don't account for that wick right there. So it's a bell curve, and we're positioning to capture the optimum, right? The top of the bell curve. Once in a while, the market pushes to the right edge of the bell curve, right? 36 pips instead of 27. Okay, so on our 5-minute chart, we are progressing through that, that ladder that we built. We're doing it slowly. We've kind of waffled around sideways for a few minutes, but yet, it tells you, it let your brain know that there's a job to be done at certain places on this chart. And then if you cooperate with that mindset, and it will help target that next move, right? Remember, we're not chasing the current move, right? Just because it seems like it's going down, we're not trying to make our money because it seems like it's going down, right? It seems like it's going down because it's testing for support. Once it finds that support that it's looking for, this illusion will end, and the market will probably go in the intended direction, right? Leaving behind a whole bunch of people stuck in the wrong positions. All right, so that yellow line right there is really the one. I need that yellow line to hold, right? That's where my break even is. That's where the average of my swing trades combined with my 3 pip stuff, right? That's where all my risk lies. So I'm just trying to stay above the risk. All right. Opportunity to spend a little bit of money if you have it. No, spend it right there. Let's go back to our hourly chart just for the sake of curiosity. All right, so this was last Friday, or I mean, the last day of 2023, right? We were playing inside of here and we were expecting this, which played out beautifully. We come in later. This is what we're coming into. I've been tested for the low. we think the low is holding because we are already making a slightly higher high and we're testing for a slightly higher low, right? So if that's valid and not an outside range, we're going up. And again, not to the moon, right? So we have to limit our expectations to something that's real, something that's, achievable within our time horizon. Okay, so we have a lower boundary, we have an upper target, and we know we want to be buying on the way down so that we can test for these support levels in the hopes of finding where the bounce is located. Right, so this is box number 2 now. Look at that move. Yay. Right, so this opens up the door to buying 4 clicks. Right, slowly but surely, if we notice here on the 5-minute chart, we just came to test the inside of that swing. You've heard me say that before. Right, so the current candle is testing the inside of this formation right here. Right, so that very, very low of that wick. Right, the low of the current wick right now is testing the inside right here. And so there's room to go a little bit lower still. Right, that's the kind of stuff you're looking for. Right, excuses to take a trade. All right, so we're just recycling our money. We've built a long position. You can see it. Go, closing some more profitable trades. Sorry, I'm punching in numbers on my other platform over here for 2 seconds. The market is finally moving. One last one. There we go. If anybody is, a gold trader, if 257 gives way, we're probably heading to 210. Just putting it up there. All right, keep pushing up. Euro. All right, so the testing our assumptions is where the money comes from. When the assumption fails or the assumption is wrong, we immediately switch into we got to fix this, right? And then by aiming to fix things, we're lessening the size of the losses. We're focusing on all the right things, right? We immediately stop chasing the money and we start chasing the losses. We start minimizing or reducing the losses, engineering the losses. Right? So this is where you'd want to recycle that same trade that just closed. I'm just clicking one time. right? There's another one. If you have the money to do it, box number 2, right? And then we might be forced with box number 3 and eventually box number 4 before finding the support that we're looking for. Right? So if you can close some of your trades like we're doing here with profits along the way, you're exploiting drawdown, right? You're making money while you're in drawdown, building a position that eventually yields the next move, right? The next move is where the money comes from on the position building. And so it's surviving the existing move, right? Playing within the limits that you have. There we go. Right. We're, we're either at the table or we're on the menu. I choose to be at the table, right? Be the diner, not the dinner. There we are. So if you have money to spend, you know, the percentage that's allotted in that particular box right there, right now on the pullback, you know, a retest, that's a good place to buy. There's that red candle. Right. So remember, it's the positioning for the next move. That's the critical piece. We finished the year with a bang, and we're going to start the year with a bang. And so the intermarket is still one big market where it's uh, it's everything against the USD. And then I think this year we'll see what happens with the US dollar, with the US economy. There we are. So if we move our box and just, you know, catch that breakout right there, right? So now because we're in this middle area, we would expect to stay in this middle box, right? If we go back up, now we're in this box and we would expect to stay in this box, right? It's an expectation. And because we set the stage for these expectations, we know what to do within, and then we behave a certain way on the perimeter. Right? So if I can buy here, I'll buy. There we go. I'll take one click right there. Right, so checking the US dollar really quickly, or sorry, the dollar index, Dixie. Right, so remember going into last year, this was the week going into Christmas. And this is what we're dealing with right now. Right, we're almost back to resistance right around here. Right, so our expectations are that we'll find a low somewhere here, right? We're testing for a low in this area. Once we find that low, our bullish position will start to pay for the work that we did. And as such, we'll be able to start becoming a seller from a higher price, somewhere near 1-1. Right up there, 1-1, right around here. Right, so we want to be sellers up there, which would happen to be about 5 boxes away. All right, so let's keep measuring boxes. And then wherever we are within the box, that's how we spend that money that we have. Right? Just for the sake of curiosity. This move right here is 9 pips. This is a little bit too big. I'll just put it there. So just leave it like this. If you have money to spend, we're back to support, right? We're back to that rung on our ladder. Would be a good place to buy right here. We only have 10 more minutes together and then I'll have to let you go. But the plan remains, right? We want to be buying for support. And ultimately, we want to be selling at resistance somewhere near 1.1, right? So it's a matter now of layering this position, right? We want to build a position that will end up paying us in the future, right? So it's this willingness to be at risk for the time being, right? We know this is not going to the South Pole today. Like it's not going to keep going and going and going today, right? So we're trying to find where that ends. We're expecting it in this neighborhood, right? And so I've been building and building and building and building, and because we don't know where the bottom is, we don't know the future. We have to start when we know the past is finished, right? So we measured the move up. We know this was a normal move up, 2.5, 3 boxes, and now we're just pulling back, a normal pullback. And it so happens to be happening on schedule, right? And then with the UK fix, we may very well just come down here. All right, so get ready for the unknown, right? That's where you create these other plans. And then when it comes down to executing these other plans, uh, you know, just do it. Click the button, right? You already know what to do. Don't debate it. Okay, so we're sitting here waiting for our positions to play out because we allocate some of the money up front to these boxes. We're just now waiting for the opportunity to spend it, right? I have to be in box 3 to spend the money that belongs there. And then if I can just recycle the trades like I'm doing here along the way, closing profitable trades as I'm building a position, all right, the account grows and I am managing the drawdown, right? So we have an expectancy. We know where we're wrong ahead of time. Right? Can you commit to that level? That's the idea. Can you be wrong when you're supposed to be? You will. With this method, you will. And because the box tells you what to do, when to do it, In the beginning, you might be compelled to fight the box, but after a while, following the guidelines, it becomes second nature, and the law of large numbers just takes over. Right? As long as you have an overwhelming amount of tiny, tiny wins like this, and you manage the drawdown so the losses are not out of hand. We cap our losses at 36. We engineer everything else. Right? So it's this engineering that makes us the money and keeps us safe. Right? I just clicked twice there. Okay, so we know what to do. We know how to do it. Right? We understand this is a higher high. If this low does not hold, we will have an outside range. All right, and what is an outside range? It's a trader's kryptonite, right? That's our worst enemy right there, right? If the market decides to go lower and make a lower low, therefore making an outside range, a lot of people that had their stops right there got taken out, and anybody that has their stops below this low is about to get taken out, right? This is why an outside ranges are literally our worst enemy, right? You and I use space to combat this, right? If the outside range, if this market behavior happens to fall within our 4 boxes, we can survive, right? We can survive. It's a matter of surviving. It's all it is. You're learning to lose. We have to figure out when to do that and to do it effectively, cheaply, uh, with as little pain as possible. Right. So right here, right now, we're testing for the current low, and we're expecting it to hold. Right. That's the probability. That's the assumption. And considering the ADR, remember that measurement we took at the beginning of the day? Right there, the average daily range. If we measure just today is at 102, and the average is 80. Right? So it would make sense to expect something out of this. And again, it's just a probability, right? Anything can truly happen. Right? That's nothing. There we go. All right. So remember that ladder that we built? We're now retesting at the very, very bottom of the ladder. Right? We may start to go back up the ladder. We'll see. So yeah, it's positioning, it's layering in the money that you have, the money that you're allowed to use, right? So you're not robbing Peter to pay Paul. You're not undoing yesterday so that you can play today, right? It's all allocated to these boxes. And so if yesterday or today's a really bad day for you, when you come back tomorrow, your 1% per box might be slightly lower, right? Your position size might be a little bit less. And that's the Kelly criterion, right? You want to size down when things go bad. You want to size up when things are good. Right? So here we are testing. Is this a double bottom? Right? We can't call that a double bottom until we break the top of the range. Right? So until we break the top of the range, this is not a double bottom. It's just a range. Right? So we're expecting things, and then we behave according to our expectations. Couple more minutes, and I'll have to let you guys go. Okay, but we are positioned, situated, so to speak, in order to profit from finding a bottom, right? So remember that after I let you guys go, right? Don't touch your stop losses. Don't touch your targets. Just expect the ones that are already here to play out, right? If they don't, guess what? You go to the stop loss, right? But that's the lower probability, right? And so being probability traders, we trade the probability of certain things happening. We're not waiting for confirmation, right? We need the proof to take the trade. And then that's usually before the confirmation, right? So we're trading for that next move. The folks that need a confirmation, they usually have missed that next move and they're waiting for something even bigger. But the confirmation has cost them money, right? So here's that place you want to buy, right? Making a lower low. Right? So again, we're not overspending. We're not going click, 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 right? And also, we're not trying to pick the low. We just happen to be here, right? The system happens to make me buy support. And so if this is support, I'm buying the low, right? So yeah, we're really overextended today. We're now at 103 pips or 158% of the average. That's okay. We're floating $30 of unrealized profit, and the account is 3,400. Right, so remember the goal, right? You're positioning yourself for what comes next. This, right? And again, it may not go all the way there, but at least 1.1. All right, so drawdown is not, it's not your enemy. It's actually a necessity. Too much of it is bad. It's like anything else, right? So we're using drawdown with moderation. We moderate using the 4 boxes. And inside that 4-box environment, I try to make as much money as I can, right? So while we're doing this kind of stuff, everybody around us is positioning 1 or 2 big trades, and they're spending their days more or less in drawdown, right? And so why not make money while in drawdown, right? So this account right here, we've made about 3,000 pips, 2,800 pips so far. Right? We've made 1,500 pips on the long side. We've made 1,200 pips on the short side, right? So think of yourself 10 years in the future when you're doing this, $10 a pip. Hey, Happy New Year, Laurence. There we are. Right, so we're testing levels. We know we're in the ballpark. Being in the ballpark grants us flexibility, the luxury of, being wrong, making mistakes, and you know, fixing our mistakes. So anyways, folks, we're near the low of the day, right? We've built a long position. Just wait for it to play out. You're ready for this. You're just waiting now. Don't touch your stop losses. Don't touch your take profits. And I'll see you guys tomorrow, right? Same time. In the meantime, look for this to be uploaded to YouTube. And if you want to, you can go and watch it there, right? Don't forget to like and subscribe. Thanks. Bye.